What's up traders, Tom here with another video. Today we'll be talking about the stock market indicator that on every previous occasion has signaled the end of a crash and the beginning of a new bull market. Has it come too soon? And what is it? Stay tuned. So if you were going to ask me during this recession, crash, whatever we now want to call it, what was my number one signal? That would be MACD on the weekly. We'll be talking about that in this video, and we're talking about why it's such an important signal and what we potentially could see this week that could lock the MACD in as a positive for the first time in a very long time. This will be the first time we are still in a real recession, as in the real economy, but the stock market will be showing a signal that shows the bottom is not only in, but potentially we are seeing the beginning of another big bull run. The Fed and Jerome and the printing press has been going into full action this week and certainly has made for some big aggressive moves. We talked about how we think the stock market is pretty much in this kangaroo kind of method where we're going to see big volatility each way for the next 12 months as we start to see the economic events and the economic reasons come out in terms of stocks actually showing their reports of what's happened over this crisis. But the Fed is there every single time. I find it curious that the Fed has come out so many times this week during a critical period. We have Tuesday, Wednesday, Thursday, and Friday with the chair, Powell, speaking about the markets. And I can only imagine this is because the boffins are seeing such huge risk if they don't alleviate the current concerns. And they're doing a great job of doing that. So let's get on with the technicals and start by talking about the US 500. So one of the things we spoke about yesterday was that we saw bullish movement. We pretty much were sitting around here when I made the video. And I mentioned that the resistance, which was at around 30.80, was going to become support. And during Jerome's speech last night, actually the market sold off. And at that same point, we have all the moving averages, the 20 and 50 EMA and the 200 simple on the 2 hour. This is a critical point because when you get three moving averages so close together, it acts as dynamic support. And that is the same point where we're seeing the resistance on the previous swing. So very key level. Anyone that was buying off that is doing well. And if you actually look at the smaller time frames, you'll notice an aggressive buy zone off this. And that's what Wall Street likes to do. I've mentioned a few times in this channel that if you're trying to short the US 500, you are struggling against the trend. The trend has been up, and every time the trend is just about to go short, the Fed have been stepping in. So you can trade it, but you're probably better off trading it to the long side. And of course, if you want to trade both sides, maybe look at other instruments. It's definitely something. If you're investing, obviously there is a floor currently in the market. Let's talk about some of the news that's been coming out. HSBC is now talking about cutting 35,000 jobs to boost growth. So they pretty much said they weren't going to do this in March, as it says here. And now they've said we're going to do it. This is the disconnect that you're going to be seeing. Company cuts 35,000 jobs. That's a lot of jobs. Are they going to do better from it? Yes. We're going to see banks doing this. Banks are going to basically say, well, our hands are tied. This crisis is too much. We're going to fire a whole bunch of staff. They're going to get more profitable. And unfortunately, governments around the world are going to have to find jobs for these people. And to do that, they're going to need infrastructure projects and all sorts of things that we'll talk about on this channel. But this is pretty big news, I think, and that's a big amount of jobs and one of the big ones. Another thing I want to mention is we're seeing oil dropping today. But of course, the stock market is up, and it shows that certain industries are still going to be in pain from this idea of the second wave. Let's just call it on this channel the same wave that's been going on, just the increase in spikes in certain areas. So oil is falling on those fears, and that means that you're going to see stocks that are to do with those fears be as strong or as bullish as maybe the tech stocks and other stocks. Something to think about. We are seeing record spikes in certain states. Everybody's aware of this. You can check this news out every day. The market doesn't seem to care. It's got the paralysis on this. It doesn't think about it right now and doesn't seem to mind. It's all about the Fed. Quick update on the US dollar. In terms of the US dollar, we're seeing strength coming back into the dollar, which usually would mean risk-off sentiment in the markets. And if the dollar gets through this 97.50 area, we would expect strength going into the 98.50, where previous support will become resistance. This will also be a little inverse kind of head and shoulders, but more importantly, we have the change of trend where the trough to the peak, to the higher trough, to the higher peak. And that is a change of trend on a 4-hour, which is a significant time frame. We do generally prefer 4-hour, daily, weekly in terms of our time frames. So let's now talk about what many people are going to be here for. And that is the indicator that usually shows us the way out of a recession and that the bottom is in. I've used this before. I use this regularly, and this is the MACD indicator on the weekly. We see that the histogram here has gone under the zero, and we are now poking above to the positive side. Now, has this been locked in? No, because what we need to see is we need to see the actual weekly close, but it is really high. Here's where the coincidences start to come into the market though. If we go back over time, look at what happened after the GFC. It went positive after having a big sell-off, and of course the MACD going very, very low. It went positive, and that was the floor in the market. If we go back over to where we are right now, we again went under that 100, and then now we're looking at the positive side. What about the previous crash though? Here is the tech bust. So during the entire period of the tech bust, all the way from 2000 all the way to 2003, we saw the MACD remain under the zero number. We only saw it get positive in 2003, at the end of 2003. And since then, of course, we saw a strong American economy and a strong American stock market. So this indicator doesn't lie from the perspective of when the MACD goes super negative and goes under at least a pretty key zone. You'll notice there are some dips where it starts, but it never goes down enough. So the MACD indicator is incredibly important on the weekly. We saw it happen last year where it went negative, went pretty negative, and then came out positive. And then since then, it had that big bull run on it again. It's a signal that shows the change of sentiment, and it shows that the market has usually got a flaw in it and it's going to start bulling. It hasn't failed on many different recession angles. And this is weird because we would never be usually expecting to see this quick. It kind of shows that idea of the V shape that it's in. And it's tough. If you're a long buyer and you hold stocks, then you should be, of course, applauding this and very happy with it. But you would never usually see a reversal this quick on the MACD indicator. Generally, it would hover underneath zero. You would see kind of that U-shape action, and then eventually it would go positive and you would get your opportunity. You'll notice when you look at 2003 and you look at 2009 on the charts that it gave you amazing entry points. And that's why I was looking to this as one of my signals that we're getting out of the recession and we're moving forward. I've used it. I know I've studied it. It's something that's very, very key. So the S&P 500 would usually be signaling getting out, and it could still be. As I've said on this channel, you want to have a part of your portfolio always long in quality that you want to pick up. There still is actually opportunity because remember I said some stocks are not doing well because of the virus concerns. But guess what? They're going to be sometimes opportunities to get into. So there is still some out there. It's just tech that's a little bit of a concern. And by talking about tech, I want to bring up this word, antitrust troubles. Remember during the mid-2000s, Microsoft had all those problems with the government. I still believe that Google, Apple, Facebook, and Amazon are going to potentially come into some form of trouble with the government over the long term. So what I mean is they're not going to do it just yet, but at some point the government are going to turn on these companies getting so large. I wouldn't be surprised, and it will become a risk. But the main thing I'm just going to say is that there's always a really real risk that this will take the already inflated PE ratios on the tech stocks and bring them back down to earth. So there may be an opportunity for people that aren't in the stock purely because of the government getting involved. They like to do it. They may do it. Be warned. It's not going to happen tomorrow. It's not going to happen in 12 months, but it might happen at some point. So that brings me to another lesson that we need to talk about, and that is DraftKings. I have seen many YouTube channels spruiking, buy DraftKings, buy DraftKings. It's amazing. The problem with this kind of stock is while it is a cool company and it is a cool idea, it's really overpriced. I think it's like 700 or 800 times earnings. Let me have a quick look here. 736 times earnings. Now that's a bit of a misleading kind of ratio, but you can see how overbought this was from the retail kind of herd. This stock has potential, but it's very expensive. And what have DraftKings done? They've capitalized on the idea of selling stock with the demand that's out there. So they're selling stock after more than doubling since the debut. They're doing so, and of course we're seeing it 5% down pre-market. It just shows you that this is the type of thing that can happen as an investor. It's not bad maybe over the long term, but it certainly does hurt your share price. So be warned. Always wait, and my key rule is I like to wait a few years. I actually like to wait 2 to 5 years when a stock comes on the indices. You'll notice that most tech stocks also, when they come on with way too high valuations. And then about 2 to 3 years, maybe 4 years later, once the books come out, you'll notice you get much better buy prices. There are so many I could look at, and we will cover them on the channel. It's a very, very interesting topic. A few people wanted me to cover the ASX 200, so we'll do that now. In terms of the ASX 200, we've seen a large bullish move. We are currently looking at around the 6,000 in terms of price, with the market really just following the S&P 500, but being a little bit weaker. It's maybe more value in, I guess, the Australian stock market. Back here, there was definitely more value. The S&P 500 was already at around 3,000 and we were still at 5,500. So a lot of people were buying our index, and there's a good reason why they were doing it. There are technicals here, but at the end of the day, when you're trading the A200, you just need to be aware what the big one's doing, the S&P 500. Whatever it's doing, we will follow. What you can then do, though, is you can cross-reference it and say, well, is there more value in the S&P 500 or is there more value in the ASX 200? And that's what happened here. We saw the break on the S&P 500. There was more value in our stock market in terms of PE ratios, etc. So always think about that. It's a very important fact. We'll cover the ASX 200 and more in future videos. Hopefully everybody enjoyed it. Remember to subscribe and hit that bell. If you like our videos, give them a like. Comment down below if you want us to cover any specific topics, because we're always looking for new ideas and I love to bring in a little bit of variety into the channels. Happy trading everybody and good luck. Let's see what Jerome Powell does next. Bye.